Hi, I'm Joe Ezernak, your host for our July video update. I hope everybody's having a good back to school experience. I know my family was ready to get back to a normal schedule. And speaking of school, if I were to give a report card for the stock market right now, I'd give it an A+. And let's take a look at the star pupils, which are the Magnificent Seven. This list of $7 trillion star pupils has been the primary driver of the returns for the S&P 500 this year. As a matter of fact, they're responsible for over 70% of its return year to date. As a matter of fact, their performance was a cause for a little bit of concern because the market itself was not broadly participating in this strong rally. So I'm going to show you a chart that illustrates the point of concern that we had. I've titled this slide Fantastic Voyage because the S&P 500 has defied expectations and the odds for a year-to-date performance that's pretty strong. But if you look back to the spring, the blue line here is the ETF SPY, which represents investing in the S&P 500. The green line illustrates the ETF RSP, which represents investing in the S&P 500 equal weighted, not cap weighted, like SPY or the traditional index. Going back to the spring, you can see a nice rally bounce from the bottom for the S&P 500, and it continues up for good growth. To contrast that, the green line or the equal weighted S&P 500 actually continued to go down for a bit, bounced up, turned back around towards the negative direction. Where towards the end of the early summer, the equal weight S&P 500 is actually flat to negative, where the cap weighted S&P 500 is actually up 10% or a little bit more. So this is quite a large divergence between the two. And in a healthy market, you like to see a broad participation. You want to see basically most of the stocks moving up, not just a handful, especially something as narrow as the Magnificent Seven. But eventually, the rising tide began to lift all boats. So I'm going to push this forward a little bit and focus in on the window from the summer, where you can see the equal weight S&P 500 is performing as well and even a little bit better than the S&P 500. And this is what we want to see in a healthy market, where investors are not hiding from risk, but they're embracing the market and they're expecting overall growth. So this is what a healthy market looks like. But one quick question, a question of curiosity. When you hear the words fantastic voyage, who do you think of more? Do you think of Isaac Asimov, or do you think of Coolio? So 1994 was a fun year for me, so I'm more inclined to think of Coolio and his fantastic voyage. But please let me know. Moving forward from the A+ stock market to what is the actual economy doing? And this is the Purchasing Managers Index, or PMI, which comes from the Institute for Supply Management. On the left side, we have a line chart, and the neutral line, this black line, is 50. So this orange PMI chart, if it's above 50, manufacturing is expanding. We're producing more goods. If it is below 50, manufacturing is contracting. So we're producing less goods. And so the PMI has been below 50 in July for 9 months, which that marks the longest continuous stretch of sub-50 PMI readings since the Great Recession. And the economy overall is contracting as well. So if we were to grade the economy, I guess maybe a not satisfactory would be the correct score. Some of this is being driven by the Fed. So the Fed has raised the Federal Reserve rate faster than any time in history. So we've basically gone from right at zero up to now we're at the levels we have not seen since 2007. Very fast, steep rise. And also with monetary policy, the Fed is going through now quantitative tightening, which is the opposite of quantitative easing. So instead of putting liquidity in the market, they're now taking liquidity out of the market. And Their goal in this is actually to cool the economy and their efforts to fight inflation, which is now showing some signs of success, as inflation is still higher than we want it to be, but it is much lower than it was. Hopefully the Fed will continue to have success in battling inflation. I know the pain of going to the grocery store trying to feed two young boys. So we do need to level that out a bit. As I wrap this up, I want to remind you to please check out Don Beasley's series on timeless math. Once again, it's always entertaining and maybe you'll learn something. But if you have any questions, concerns, or thought, please reach out. I'd love to hear from you and just let me know.